Now, speaking about certain stocks, everyone needs to take some profits on two stocks. These are very popular stocks. They have a lot of hype around them, but people need to take some profits this summer, man. Take some profits this summer. Mr. Market is giving you a phenomenal opportunity to take some profits on a couple stocks this summer, okay? And I know some people don't want to take those profits because, there's so much hype and excitement around these companies right now. But let me say this. The hype and excitement doesn't last forever. These hype and excitement periods, they last, but for a little bit. Like sometimes it's a few months, sometimes it's a year or two, but then it fades. And then you start to slowly have a little less hype and a little less hype. And as that hype falls down, the stock falls down immensely. It's not a small amount. And so what are these two stocks? I hate to say it, but it's Tesla and Palantir. Two of the stocks that I've profited from the most, over the past number of years, right? Two stocks I made ridiculous gains on, ridiculous sums of money on. But I have to be honest with you guys, these are two stocks that are ripe to take profits on this summer, especially if this market continues to roll risk on and people are just willing to pay anything for these stocks. You got to take some profits this summer, man. You got to take some profits. The PE ratios are out of control in regards to both of these stocks. Now, in a hype cycle, you got to understand PE ratio doesn't matter. But this hype cycle will not last forever. Maybe it's got a few more months left. Maybe it's got a month left. Maybe it's got a few weeks left. Maybe it's got a year left. I don't know. But the hype cycles don't last. Then reality comes crashing down, and it comes crashing down hard, right? And I've witnessed these stocks go through hype cycles. Like people weren't around, I'm sure there's plenty of people watching this video right now. Were you around for Palantir's first hype cycle? I hope you were. Some of you guys watching this video, you weren't around for that first hype cycle. The first hype cycle around Palantir stock was back in 2021. Stock went to $30, $40 a share or so. That hype cycle went away. Palantir numbers started to slowly deteriorate. Not like the company stopped growing. They still kept growing. It's just their numbers started to get as exciting. And the stock fell to $5.98 from $30 to $40. The hype, it died down. And that's what happened to the stock. Tesla stock goes on just a ridiculous run from 2019 into 2021, beginning of 2022, right? Oh my gosh, so much hype, so much excitement. Tesla's putting up amazing numbers, obviously, right? Like extraordinary numbers in regards to their growth rates. Tesla stock goes from, a stock that pre-split was like a $13, $15 stock, all the way to $400 a share. Unbelievable. A lot of us investors made life-changing money, game-changing money, right? Insane. Incredible. And then Tesla stock at the lows in 2022 went down to right around $100. Stock fell around 70%, a little over 70%. So right now we're in a very exciting hype cycle in regards to those two stocks. Whenever this hype cycle goes bye-bye, those stocks will go through a major downfall. There's kind of two things that could happen. One is a major downfall where the stocks crash 50 to 90%. Another situation is the stocks just don't really do anything for years and years. And maybe they go up, they go down, they go nowhere. Tesla has a history of doing that. It's actually done that. If you look at Tesla for the last number of years, it's done exactly that. You look at Tesla, you could have bought this stock for $400+ back in 2021. The stock's lower than that today. So, and you're looking at the stock today, I wouldn't be surprised if it's a lot lower 2 years from now than it is today. And you look at Palantir, Palantir's in, amazing hype cycle right now. Who knows where it ends at? Maybe it goes to 150, 180, 200, who knows? But after the hype cycle slows down and dies, right, the stock's going to have a big downfall. And it's going to be painful for a while, for quite a while, in regards to that stock. And so you got to look at these stocks and you got to understand, got to take some profits this summer, man. Tesla, everybody's so excited about robotaxi. Oh my gosh, robotaxi is going to be this big thing, man. I was a shareholder of Uber in the past. Obviously, I was a Tesla shareholder for a long, long time, okay? Let's say hypothetically, Tesla can be as big as Uber is. Now, there's a big question about that. Uber is a worldwide famous name with people know if you need to get a ride somewhere, you take an Uber, right? And they have a competitor in Lyft, and they have a few other competitors in other markets. But at the end of the day, the masses, if you need to go to get a ride to the airport and you don't have a friend or family member, you're booking an Uber, right? Worldwide famous name, huge market share. If Tesla became Uber, right, which keep in mind, a lot of Uber's valuation is also in Uber Eats, which I don't know how Tesla's planning on doing that because, they're not going to have humans in the cars. So I don't even know if they'll ever be able to do a food opportunity there, or at least anytime soon, until they get the robots to work at some point in the 2030s or 2040s or something like that. So if you look at Uber's entire market cap, it's around $180 billion. So if Tesla becomes as successful as Uber in the next 5 to 10 years, which is a big question if they can even pull that off, but if they did, you're talking about a $180 billion opportunity. It's not as exciting as it seems. Now you can say, what if not only they became as successful as Uber, as big as Uber, as dominant as Uber, but additionally, they became twice as profitable? You can say, well, these robotaxis are going to make so much more money. They're going to be so much more profitable. There's a debate if that's even going to be like that, but let's say it is. So they make twice as much profit. Then you're adding about a $360 billion number to Tesla's market cap, right? But here's the problem. It's already priced in more than that. When we look at Tesla's valuation, the valuation of Tesla is over $1 trillion, right? I'm assuming you would assign about $200 billion for the auto business, considering like how big the EV business should be 5-10 years from now, which, the growth rates have been awful really recently in regards to that business, actually in decline. But let's assume like it's just a fluke. EVs are still the future. They're going to grow. They're going to become this big thing. Then you could assign about $200 billion of value to the auto business. Then you could assign, and this one's a real stretch, $200 billion into services. And so when I talk about services, I'm talking about the supercharger network. I'm talking about problems that happen with Teslas, right? I'm talking about the fancy maps feature that I pay an extra $10 a month for or whatever in the Model X and the Model S of mine, right? All that type of stuff. So you assign another $200 billion there, which is a big number, but let's say you want to assign that. Then you could assign $200 billion to energy business. Energy business is so small, but you say maybe it grows a lot over the next 10, 20 years, becomes a much bigger business. There's actually, I think there's a overall move away from a lot of sustainable energy that I'm starting to see out there, but let's say, that's just a fluke as well. It's still this next big thing over this next 10, 20 years. So you assign about $200 billion of value to the energy business. That means you assigned over $400 billion to the robotaxi business. And the only way that business is ever worth $400 billion is if they become Uber and they become twice, if not more than twice, as profitable as Uber. Now, there's a risk that they never become Uber, and there's a risk they never make as much money as Uber, and there's a risk that they never become 2x more profitable than Uber. And those are all risk factors you have to assume. So Tesla is priced in the best case scenario. And so if you're buying Tesla today, understand you're already buying it assuming they already did all the stuff. Now you may say, well, where's the valuation for the robot business? Listen, man, the robot business is not going to matter to the 2030s plus. Trust me on that. The 2030s plus, then you can maybe talk about that eventually some sort of meaningful business. Maybe 10, 15 years from now, maybe it's some sort of meaningful business for Tesla. But it's not, I can tell you, it's not going to be any sort of meaningful business this decade, in the 2020s, right? So, look at how long it's taken them just to freaking get the robo-taxis. Like, people are all excited about, there was a robo-taxi driving around in Austin the other day, and they're all excited on X. Dude, Elon's been talking about this robo-taxi was going to happen for like the last 10 years. 10 years! It's finally, not even happening, actually, technically. There was no one in the car. And there was a Tesla having to follow behind this Tesla. So, keep in mind, this stuff takes a long freaking time. And in regards to Palantir, it's just, and I posted this inside my private stock group yesterday. I said, even under my Palantir bull case, it's starting to get hard to see much for gains in the stock over the next few years. Because under my bull case, I have them growing revenue 45% in 26. 40% in 27, 35% in 28, and 30% in 29. And I had them doing 10 percentage points better net income growth each of those years. So under my bull case, my compounding annual growth rate, and that's an 80 to 100 PE we're even talking about with this stock, even under that very bullish scenario, lucky if I can get low double-digit gains in the stock. And that's a bullish case. My base case, I'm not even going to make money in the stock over the next, 5 years. And so, this is where you got to look at stocks like this and you got to say, it makes sense to take some profits this summer. And the further Tesla moves up and the further Palantir moves up, the more it means to take profits. Because at the end of the day, if you're a long-term investor and you're planning on being investing in these stocks over the next several years, you just start to look at them and you're like, it doesn't make sense. Like it could be 3, 4, or 5 years down the road and you still won't have made any money from where these stocks are trading at in the summer. Unless magically just, but I can't even say like magically growth rates get even better because they've already priced that in. That's the craziest part. It's even if the businesses get exponentially better, it's already priced it in. That's the thing you gotta understand. So, it makes a lot of sense to take some profits this summer on those stocks, and especially the more risk on the market goes. Now, that might lead you to a question like, when's the time to hedge? We've been in roughly a 32-month bull market. Let's assume we break these all-time highs this month or early next month, like what happened in 2018, right? And then we just blow through those all-time highs in August, September, right? Well, when's the right time to hedge? Here we go. I would say best case scenario, this market continues to go risk on, right? And then you can start to enter some hedges kind of in August, September, and then maybe October as well. And probably do those hedges where it's put options that expire at some point in 2026. Maybe it's like the first half of 2026, maybe it's the second half of 2026, right? And so that's kind of what I'm looking at here. But we need the VIX dead. The issue is right now, and I'm looking at put options, you have to pay really big numbers right now for put options on a lot of these stocks. And the reason being is a lot of people hedged like crazy back in March and April, right? Because they thought the market was going to crash and it was just going to keep going down. So the VIX spiked to ridiculous levels. So what you're having now is the people that are selling these put options want too much money for them because they probably paid really big numbers for them and they're having to take losses. It reminds me of the housing market, right? The housing market over the last few years, you're looking at some of these homes that people have been listing, it's like they want way too much money for that and the homes just sit on the market. That's what I'm seeing with put options right now. People want way too much, right? If we can go more and more risk on this summer, right? People are feeling better about the market. Things are looking better. The IPO market keeps rolling in. You're starting to see IPOs now, and these IPOs are flying to the moon. That's going to lead to more of a good feeling around the market, which leads people to say, F puts. I don't need puts. I don't care about puts. No. And that leads people to just sell puts at whatever they can get for them. So if we can get the VIX dead, right, which is already starting to die a death, but if we can get that baby to die, we could be looking at put options this summer, or let's call it late summer or early fall time that could be very attractively priced then at that point in time, right? And these hedge fund managers, they're already starting to kind of look the other way on bad news. The more they do that, the more they're not going to care about their puts anymore. And that's when we can scoop up some of these put options for very attractive prices. And you could be able to hedge $1 million portfolio for probably $10,000 of puts, which is 1% of your capital invested. And then you could have a great deal of protection in case this market tanks at the end of this year like it did in 2018. Or in case the big recession hits next year, something like that, right? You'll be well hedged just in case. And I'm telling you, if the VIX dies and these fund managers stop caring about puts, you're going to be able to get puts for pennies on the dollar. And you will be able to hedge a portfolio to a very high extent with only 1% to 2% of your capital. And here's the thing, if the market was to go south, let's say the market did deteriorate at the end of this year or early next year, right? Suddenly that $10,000 could grow to be $50,000 or $100,000. Because when the market starts to tank, put options don't just go up a little bit. Like you all of a sudden start to get some 100%, 200%, 400%, 600% gains on those. But got to get them at the right price. Pricing is very key. Timing is very key whenever you're hedging. Just like I had some Tesla puts, what was that, a week ago or so. I made over 40% on those in like 2 days. What did I do? Did I keep them and say, you know what? It might go down more. So no. Out. Took my profit and I ran. Peace. I'm not staying around for that. I'm not going to get greedy. You gotta get that part right, man. Because if you try to get too greedy, whew, I would have ended up with put options that were worthless today versus a 40% gain, right?
Hey, it's Jeremy. I hope you really enjoyed that clip here today. What you're looking at in front of you right there, that's 1000xstocks.com. That is my personal advanced software that I use to make my investment decisions when I go to invest in companies. As somebody that's been in the market 15 years, I got sick and tired of using these different services that folks have out there that are designed for traders in the market. People that are looking to get in and out of stocks. That's not what I'm here to do. I'm here to long-term invest. I need to be able to see all the different ratios and metrics that are very important for me as a long-term investor to judge if I'm getting a great deal on a stock or if I'm getting ripped off on a stock. I need to be able to compare different companies versus each other and be able to do that in a matter of seconds rather than it taking hours like it used to before I created this service. I want the ability to listen to conference calls, see SEC filings all in one service. That is what we've created with 1000xstocks.com. If you are looking to access this software, go down to the description area of this video. You can click the link down there and apply for access. If you don't want to do that and you want to search a website, go to 1000xstocks.com. Enjoy it.
Alrighty, next one up here, the bear traps. Larry McDonald on his 30-30-30-10 portfolio.
99. You've also got precious metals that have been climbing. You know about gold. We've been watching that for a while. It's up significantly this year. Silver at this point is at its highest level since February of 2012. Our next guest says that gold and other precious metals have been warning investors of what he calls a creeping financial repression and that a bond market panic could be looming. Joining us right now to explain all of this is Larry McDonald. He is the founder of the Bear Traps Report. He's also the author of the new book, How to Listen When Markets...
Was my guy a human? Look at him.
A creeping financial repression and that a bond market panic could be looming.
Did she say creepy?
Joining us right now to explain all of this is Larry McDonald. He is the founder of the Bear Traps Report. He's also the author of the new...
Was he human or was he mannequin? What in the world?
How to Listen When Markets Speak. And Larry, thanks for coming in this morning.
Thank you, Becky. Thank you, Joe.
So Jamie Dimon was speaking in the last week or so, maybe 2 weeks ago, and saying that we could be facing a bond market revolt that could come in 6 months. It could come in 6 years. He doesn't know, but he knows what he's seeing on the fiscal side of things does not add up to nirvana for the bond markets. Why do you think it's sooner?
Well,
rather than later.
So what we try to do at the Bear Traps Report is measure the life of a narrative. So we talk to all our institutional clients around the world and kind of triangulate the information. And if you look at it, so right now the debt ceiling, we're stuck. So for every bond that comes due, one matures, and there's no new net issuance. But from September 1st to maybe, let's say, February, we're looking at 1.5 trillion of new issuance, of new debt issuance, and it comes out to roughly, could be up to 600 billion more than last year. Now, to me, the market knows this, the smart money. We just hosted an ideas dinner last night, and when you talk to institutional investors, they know this, and that's why Bessent, our Treasury Secretary, is out there with some stealth moves toward kind of really supporting the bond market later in the year. But those moves are really kind of financial.
I love Thai tea. Thai tea so good.
Repression-like, which we can get.
You like Thai tea?
Well, what moves is Bessent making?
Like the SLR expansion.
What moves Bessent making? Punching Elon in the face, giving him a black eye. That's what moves Bessent's making.
You've got then the whole thing with Wells Fargo.
SLR, which allows the banks to potentially buy more and spend more of their capital.
So it's almost like
treasuries, he's hoping.
Exactly. It's almost like QE. So we calculate that SLR expansion could be up to 250 billion of new buyers. So they're using the bank balance sheets almost like the Fed, right? The banks are going to be supporting the market. The question is, how fast does that 250 billion come in? Is it this year or next year or the year after? And that depends on the Bowman situation with the Fed, and then that debate between the regulator at the Fed, Bowman, and then Powell himself.
We know that yields have backed up a little bit, but then we also see good economic data, and that brings yields back down. You know, where inflation is not running higher, the economy's doing pretty well. What's to say that that isn't the stronger part of this hand?
Yeah, that's true. Yeah, we've had a nice move down in like 3 CPI reports. Now, the probability that one of the next 2 CPI reports actually has some of the tariff pain in it, in other words, toward higher prices, I think is pretty high.
The first one coming this week.
Yeah. So so we're in a little bit of a complacent zone on inflation, which we think about the last 3 years, we've been there a couple times, right? We've gone from like inflation fears to kind of inflation complacency back and forth. So I think we're priced in. Yeah.
If the bill gets passed, if the economy continues to do well, if there is growth that's stronger, as a lot of the Republicans supporting this bill have suggested, then what?
Well,
I heard, word on the street is, from what I heard, is the Trump administration's cooking the numbers in regards to the CPI, cooking them even crazier than Biden was cooking those babies, okay? I don't know. I'm going to have to look into it. But from what I heard, they changed a bunch of things to make the numbers look a lot better than what they actually are. I don't know. I'm going to look into it, okay? Because there's always been said every government administration cooks the numbers essentially to try to make them look better than what they are in reality or whatever. And from what I heard, they're cooking them more than ever. But I need to look into that, so we'll see.
Thing is that Musk-Trump fight, and Musk outed kind of the fiscal largesse in the bill. If that bill, this is really fascinating for our viewers, if that bill gets delayed a month or so, then what's called the Treasury General account gets drained more. In other words, that's the money in Treasury, extraordinary measures. And the reason why that's important for our viewers is that if that bill gets delayed and they can't merge the 2 bills by, say,
between the House and the Senate,
yeah, say it goes out another month, then all of a sudden you're burning through your extraordinary measures. That means the refill of that bill in the 3rd, 4th quarter is going to be a lot bigger, a lot more pressure on the bond market. That's what silver and platinum and palladium and Bitcoin, there's to us, when we talk about in the book, How to Listen When Markets Speak, we think $4 to $6 trillion is going to move from financial assets, which are just paper certificates, right? Stock certificates, bonds, over to hard assets.
Commodities,
a new
precious metals and other commodities.
Right.
And that's what you would advise people to do right now ahead of this?
Yeah, I mean, we think, the old 60-40 portfolio should maybe be 30-30, 30 and 10. In other words, a much larger component of commodities.
30% commodities, 10% cash? Is that what?
Yeah, 10% cash, 30% bonds, 30% stocks.
What are the signs that we should watch to say that, okay, this move is afoot, aside from the moves that we've seen in silver and gold?
Agricultural names are dramatically outperforming. And typically they're second, third tier players. We saw this in the 2022 commodity bull market, so if you look at Mosaic and some of these ag players, now some people say, oh, that's the China trade deal getting priced into soybeans. Mm-hmm. But yeah, you want to look for the commodity market broadening out. And look at BCOM, Bloomberg Commodity Index versus the S&P, or NASDAQ, and look for those ratios.
Okay, how do I feel about his portfolio call there, right? Let me say a couple things. First off, where gold and silver and platinum and different commodities go in the short term, anybody's best guess. I have no strong opinion on where gold's going to be a month from now or 3 months from now or a year from now. Same thing with silver or anything like that, okay? Or platinum. But let me say this. Do I like his strategy? The answer is no. I like a strategy that has me owning things that produce cash, that produce more money. And as the years tick on, it produces you more money and more money. And I don't want to own assets, especially in any sort of meaningful way, where I just have to count on the next guy paying more for it, which is how gold works and silver and Bitcoin and all those things, right? You just got to hope the next guy is going to pay more than what you paid for it. So then I like things like stocks, like real estate, right? They have underlying an asset that then produces you money, right? Real estate, appreciation happens over time, obviously, but if you rent a property, you constantly have that cash flow coming in, right? When you own a great company, they make more money and more money and more money and more money year after year after year after year, right? They throw off more profits and more profits. And with those profits, they can do share buybacks, which means their earnings per share is going to increase even more substantially, especially if their net income goes higher, right? They can do dividends and pay you out dividends. They can go buy other companies with their profits, right? Which makes them even more profits and makes them even bigger and more powerful, right? Which means your investment's even more valuable. So there's a lot of different factors that can happen there that are very, very exciting versus just owning a commodity or something like that. Whether it's, once again, whether it's a Bitcoin or Ethereum or, gold, silver, platinum, whatever. I just got to count on hopefully that next guy, pays more than what I paid for it, right? And so I like things that produce cash. That's stocks and that's real estate. And then anything else I'll own after stocks and real estate is 90% plus of my wealth outside businesses, right? And so outside of that, I own a little bit of silver. I own some collectibles, stuff like that. Small money. The big money, stocks, real estate. And it's going to remain like that. I don't see that ever changing in my lifetime, at least. That's just, until I'm in the dirt, that's the way it's going to be. And I have no problem with that. And, if some new crypto comes out in the next whatever years and, becomes the next big thing, that's cool. Doesn't mean anything for me in the end, right? I'm going to be doing just fine with my stocks and my real estate. And so, that's kind of my perspective on that.